From Yahoo Finance, this is Electionomics. I'm Rick Newman.
And I'm Alexis Christoforous. On this episode of Electionomics, we look at what the economy and the stock market might look like if Joe Biden wins the White House. Joining us now is Ed Mills. He is Washington policy analyst at Raymond James. Ed, good to see you here on Electionomics. Thanks for being with us.
It's great to be here, Alexis. Thanks for having me.
So former Vice President Joe Biden is dominating President Trump in the polls right now. You've done some recent research that seems to jive with that. But my question is, has the stock market, you think, fully priced in a Biden win and what that might mean for policy in 2021?
I think that is the key question, Alexis. And what we've been doing at Raymond James is we hold a weekly call. It started at the beginning of the stay-at-home orders on kind of what's happening in DC with the COVID-19 bent. When we first started asking about the election, we had about 56% of the respondents anticipate that Donald Trump was going to be reelected. And this is a non-scientific poll, but it's a good pulse. And that's our institutional investors and management teams that we provide research coverage on. But recently, when we asked the question again, it is now up to a 69% of the respondents said that they are now anticipating Joe Biden to win. So the Biden presidency is, in my mind, anticipated by the markets. Is it going to happen is a different story. And then the next thing, what surprised me is that as much as it seems as if sentiment has shifted among institutional investors I speak with regarding the presidency, there still is skepticism that a Biden presidency equals a Democratic sweep, where he would also have a Democratic majority in the House, in the Senate. So I don't think that's priced in, and I think that will be what's really interesting over the next couple of months if the market reacts to that.
Ed, since you talked to the investing community, do they like Joe Biden? I mean, what do they think of him? That's a qualitative question, not a quantitative question, but just your impression.
Yeah, I think that we do live in a very polarized world. So, I think that our personal opinions certainly kind of come out at certain times and in conversations that does incur. But I don't get the sense that the market is looking at Joe Biden or Donald Trump in the kind of knee-jerk, one is good, one is bad for the markets. Much of the conversations I've had are much more nuanced. They want to dig into, what does this mean for fiscal stimulus? What does this mean for the China trade fight? How are we to look at kind of regulations in 2021 and beyond as it relates to heavily regulated industries for healthcare, energy, financials, technology? So much more of a nuanced conversation. And I don't get anyone who is willing to say across the board, one is good for the markets or the other is bad for the markets. It really is going to depend on what the economy looks like and what the market needs to go up come January of 2021.
I just want to follow up on the Trump part of that equation. Conventional wisdom for most of Trump's presidency has been that investors like Trump. I mean, they think he's good for business. He favors lower taxes. He did preside over the big tax cut in 2017, big deregulatory push, things that are generally good for stocks. And then came the pandemic, and Trump has obviously been criticized for a slow response to the pandemic. Even now, he's downplaying the need to do testing, which is one way you might be able to reopen more quickly. Do you feel like investor sentiment toward Trump is still generally positive, or has it soured a little bit?
Yeah, it's a great question. The way I've approached that is that at the beginning of the Trump presidency, I kind of had two lists, things that were coming out of DC that were clear market positives and things that were coming out of DC that were market negatives. At the beginning of the Trump administration, as you highlighted, the agenda was squarely focused on the list of market positives. One of the debates that I've had with a lot of clients is that much of that to-do list is done. And kind of what we've seen over the last couple of years is a focus on China trade. Trade uncertainty is a market negative. There are kind of some potential upsides, but the market doesn't like the potential for the decoupling of the United States in China, geopolitical risk, scandals, or kind of different congressional investigations. So I'm not sure if it's as much of the market souring as much as there is a feeling that much of what could have been done is completed, and there's a real question of, if Trump gets reelected, what does that mean from here? And is that a market positive or is that a market negative? That's really where the conversations are right now.
And to my ear, Trump has not really said much about what he would do additionally or differently in a second term. Have you heard anything that investors should care about there?
Yeah, I mean, I think that I have focused a lot on this China trade situation, and I think that one of the thoughts is that if he were to win a second term, that he would follow through with some of the threats that were not completely followed through on the first term. I think it is a potential supercharging and continuation of a deregulatory agenda. But as we look at other things, immigration is a kind of top priority. Recently, there was a decision related to visas of foreign workers. You look at tech companies that rely heavily on that to kind of make sure that they maintain an international workforce and going to have the workforce they need to complete projects. And so I think the business community looks at some of those and say, if this is the future of the agenda, I'm not sure how I fit into that. And that's not even bringing up the tech regulations that are potential coming out of a second term of a Trump administration as well.
Ed, if we look to the past for any guidance here on the future, we find that incumbents rarely lose, right? I think we had 3 in the past 80 years, George H.W. Bush, Jimmy Carter, and Gerald Ford. What could Trump learn from those 3 gentlemen? And are there any warning signs there for him? Was there anything that those 3 had in common that had them end up on the losing end of things?
Yeah, Alexis. I mean, what we wrote in our report was that every single presidential election since the Great Depression, when the economy is doing well, the incumbent gets reelected. And for a incumbent to lose, there was usually 2 things that happened. One, a real primary challenger, which didn't happen here. And number 2, some economic suffering. It was usually at least a recession in the 2 years leading up to the election. At the beginning of this year, we had given Trump the odds on favorite to win a second term, largely over kind of how the election was, how the economy was doing here. But with the economic shock of COVID-19, we have to reassess those odds. I think his probability of reelection could easily be tied to what type of economic recovery we see between now and election day. But we're not quite sure if kind of enough voters have made up their mind that even a recovery would do it. I think that's going to be the debate that you and I are having for months to come here.
Mm-hmm. Ed, we know that Trump had very negative approval ratings in 2016 prior to the election, but he still won. Is it too early? I mean, not that you are, but is it too early for some maybe investors to count Trump out at this point?
Yeah, so that brings up 2 things. I think one, 2016, you had 2 really unpopular choices. Kind of if you look at favorability, unfavorability ratings, and in 2016, if you look at the exit polling data, if you had someone who disliked both candidates, Trump won that group by about 16 percentage points. Right now, Trump is still underwater in his kind of approval ratings. He has a net negative approval rating. Biden is about kind of even to sometimes down in low single digits. But according to one recent poll, he has a 40-point advantage among people who dislike both Trump and Biden. They seem to be leaning towards Biden. So how does Trump win it if he is not able to win that group? We're really focused on kind of, is there the ability of the Trump campaign to get the base voter out? Someone who supported Donald Trump in 2016 but didn't vote. One quick example is Wisconsin. Trump won Wisconsin with fewer than 25,000 votes. His single biggest kind of support group is non-college educated white men. There's almost 500,000 non-college educated white men in Wisconsin who didn't vote in 16. So if he can get a large percentage of them to vote, that's his path to kind of capturing Wisconsin or capturing some of the other swing states. it's a narrow path, but that's how he does it if he's able to do it.
And I want to ask you about what Joe Biden might do if he gets elected president. So he does have a fairly elaborate economic plan. We haven't heard much about it. He has not been, he's not been real vocal lately, except to criticize President Trump, which is probably the way the Biden campaign wants it to go. But he does have a lot of economic ideas, and that were almost all of them formed before the virus. So you did a nice job in a recent report summarizing some of these. He wants to raise the corporate tax rate to 28%, I believe. He'd raise incomes on above $400,000. There would be a minimum corporate tax. He would tax capital gains at a higher rate and things like that. So since all of this came before the virus, let's say he did get elected with a Democratic Senate, so he had full control of government. I don't think it would make any sense at this point to raise anybody's taxes, whether if we're in the middle or even the immediate aftermath of a recession. Does that make sense to you?
I think that's going to be part of the pushback. I think part of it, to the first part of your question about why we don't hear too much about this, I do think that the Biden campaign would love to make this election a referendum on Donald Trump and not a choice between the two candidates. The more Biden talks about his policies, the more it becomes a choice between the two candidates, and that is an opening for Trump. And so, Trump will be the person that makes this more of a push towards that choice and highlight some of these agenda items. But when you look at the economic policies that are promoted, they are different from President Trump's policies. But in polling data, you actually see a pretty large swath of Americans in support of reversing some of the Trump era tax cuts on the wealthiest individuals in this country, on corporations. There is a sense that a lot of voters have that tax cut did not individually help them. And so politically, there is some backdrop that kind of could get the momentum to get that done. Set that against a economic reality and a kind of COVID-19 recovery we're in. I do think that if they were to kind of see any increase in taxes, you could phase it in over time, that march back up to 28%. I think you could also couple that with an infrastructure spending bill, more fiscal relief, something that helps out the consumer so that the kind of economic impact is mitigated, but you're able to accomplish your longer term policy goal as part of any change kind of in an economic agenda from a Biden administration.
If Democrats were able to take control of the Senate, it would be a very thin margin, maybe just a couple of seats. It definitely would not be 60 seats.
Sure.
So there seems to be an assumption that, well, even if they have a 1 or 2 seat majority, if Biden wanted to, let's just talk about raise the corporate tax, that every Democrat would vote for an increase in the corporate tax. And I scratch my head and I wonder if that's true. I'm not sure. It just doesn't mean every single Democrat is in favor of a tax hike, and you'd need all of them. So what you have a good feel for the dynamics on Capitol Hill. Do you think Biden could get every single Democrat to vote for a corporate tax hike?
Yeah, I mean, it's an honest and really good question, Rick. And the way I look at this is that, in DC, things seem impossible right up to the moment they are inevitable. And, I try to put myself in, kind of fast forward. What does it feel like the day, the week, a couple months after the election? And, if there is a, kind of strong victory by Biden, if that comes with a Senate majority, there's going to be a lot of pressure on individual Democratic senators to go along in adopting that economic agenda. And, I think there's going to be some pressure on some Republicans to join. I don't think that there is going to be a kumbaya moment in DC. Everyone always tries to predict that after an election, and pretty quickly you see both sides go back into their corners and tribalism takes over. But I think it's something that makes it harder to come by, something that elongates the process. But I wouldn't count it out altogether, especially if you have Biden increasingly discussing that we're going to have some sort of kind of transformational change post this election, kind of a continuation of, you had the New Deal responding to the Great Depression. You had the New Society programs of a former lion of the Senate, President Johnson. I think he would like to continue and have that third wave of big policy changes that, kind of a lot of Democrats would say are needed, and some of those issues were exposed during kind of the COVID-19 crisis, minimum wage, sick leave, some of those kind of transformational changes, I think are absolutely going to be on the agenda. And there's going to be a lot of pressure for members of Congress to support that agenda.
And how do investors feel about Joe Biden when it comes to his trade policy? Is this a weak area for him? We know that Trump has gone after Biden with his relationship with China. There seems to be some agreement in this country, no matter what side of the aisle you fall on, that we need as a country to continue to challenge China. And now, of course, there's a whole other layer of that, right? We have this horrible virus that Trump keeps blaming China for. Peter Navarro recently came out, his top trade advisor, saying that China lied about the virus. So where does Biden stand on trade policy as it relates to China? And are investors more comfortable with Trump when it comes to trade policy?
Now, I think investors would be more comfortable with Biden on trade policy just because I think they would view him as more predictable. I think that there is this bifurcation that goes on where I think a lot of investors I speak to kind of quietly say, kind of support a lot of what's going on in the trade fight with China. They would prefer not to have the volatility of that. And so kind of the way I've always described this China trade fight, and I think it's important to remember, historically, it was Democrats who have been more anti-trade and anti-China. It's Trump that has brought along the Republican Party into this position over the last couple of years. But for this year, Trump is going to be aggressive on China. And Biden is going to make sure that he counterpunches on any kind of China initiative, because in DC or in politics, when you're explaining, you're losing. So if you're a presidential candidate, a member of Congress, you have a choice which team you're on. Are you on Team USA or Team China? It's not a hard choice for a politician to make. So this year, incredible increase in anti-China rhetoric. In a Biden administration, I think that rhetoric comes down. I think there is a chance to walk back some of the tariffs to provide economic relief. I think pressure stays on from kind of technology and financial areas, but much more predictable. In a return to global alliances on other areas of trade with Europe, with Canada, with Mexico, with traditional allies, the market would want that.
Yeah, and I want to ask you about two specific Biden proposals, and I just ask you to handicap the odds that these things could happen. This would be under a full Democrat control scenario. These things would not happen if Republicans still had the Senate. But the first is the $10,000 cap on the state and local tax deductions. Do you think if Democrats controlled the Senate, they would eliminate that cap and just go back to the way it used to be?
It's possible. I don't think it's a top agenda item. One of the hard thing about the kind of SALT deduction is that if you were to change that SALT deduction, it disproportionately goes to kind of the very top of the income spectrum, or the vast majority of the benefit by design goes there. So the only way in which I see a SALT change is if there's other large scale changes to the individual side that mitigates for top wage earners the kind of benefit of that repeal.
So you might be able to do that if you are at the same time raising the tax bracket on the top two tax brackets, or raising the cap gains rate, for example.
Yeah, I think it would have to be part of a compromise. You couldn't just kind of eliminate that cap, because that would come across as a tax cut to some of the highest wage earners in this country. But I think the Democrats have some real concerns about folks that are in the upper middle class, especially in high tax states that are traditionally blue Democratic states, who, when all was said and done, they got a tax increase after the Trump era tax cuts. That was not something that Democrats would support, and they would be looking to target those who got an increase that are in the upper middle class, not in that top 5 or 1% of the income brackets in the United States.
Asking the question of whether this minimum corporate tax is something that could pass a Democrat-controlled Senate.
Yeah, I think that's a great question, Rick. I think that when I look at this, what's really the question that is trying to be answered here? And it's about fairness for Democrats. There is a sense that our current tax code is unfair and it disproportionately benefits the wealthy and corporations who have lobbyists that are able to kind of put in place certain kind of deductions, that benefit them. I think what we go back, before even this minimum 15%, under the Obama administration, we had taxed earnings worldwide. In the Trump administration, with the Trump tax cuts, we have moved towards a territorial system and have established this kind of nationwide alternative minimum tax for that. So I think what you're seeing proposed by Biden is a continuation of the policies that he and Barack Obama proposed when they were in the White House, with a little bit of an update to kind of adhere to the influence that Elizabeth Warren now has on the party.
So as for if he were able to get a higher corporate tax rate up to 28%, that to me does not sound like a disaster scenario for stocks. I mean, the corporate rate used to be 35%. And, stocks went up for most of Obama's presidency, for example. Plus, if it were 28%, that's the nominal rate. Most companies don't pay the nominal rate. So is that okay, a proposal to raise the corporate tax rate up to 28 from 21?
Yeah, I think your talking points are the talking points of the Democratic Party, which is...
Oh, don't say that.
Hey, I know.
I can hear the tweets now.
I'm just joking. There is a conversation to be had that, and this goes back to my conversation about, let's not have knee-jerk reactions of one party good, one party bad for the stock market. It is much more of a nuanced conversation. It is true that the market had done well with a 35% statutory rate. The bigger issue is, what is the effective rate? And so those details really matter. We don't have any of those details as we're sitting here today. So I'm telling clients, watch this, but recognize that it's about the totality of the system that is being created, not just about some headline number.
Ed, you reminded me, I probably have to be a little meaner to Democrats.
It's okay.
Just to keep things, fair and balanced here, Rick.
Yeah.
Ed, before we wrap things up, you said earlier in our conversation that Trump needs to sort of get more folks out who didn't vote last time at all to go out and vote this time. Among them, his base being white males, not college educated. Give us one or two things you think Trump can do between now and November to incentivize those people to get out and vote.
Yeah, I mean, I think what you're seeing some of it play out right now. I think that, in traditional campaigns, you're looking kind of after the primary season for each candidate to kind of pivot to the middle and try to capture that swing voter that they've already locked in their base. I do think both Donald Trump and Joe Biden have locked in their base, but I'm not expecting the Trump campaign to kind of have that pivot. Try to win over that, kind of voter that would traditionally be up for grabs. I do anticipate that he is going through his Twitter feed, policy announcements, press conferences, do things that try to kind of activate that base and give them a reason to kind of go out, get out and vote. As part of that, I do think that this is going to be a kind of pretty in the gutter election. And the Trump campaign is going to try to paint the picture that this is a choice and it is not a referendum. And the choice of a Joe Biden is something that the base of the Trump administration would not want, trying to give him that reason to come out and support his reelection.
All right, in the gutter, we're going to get ready for a dirty fight.
I can't wait.
Gives us more fodder, gives us more stuff to talk about. All right, Ed Mills, Washington policy analyst at Raymond James. Thanks so much for being with us. And thanks to all of you for watching Electionomics. Be sure to rate and review what you just heard and follow me at Alexis TV News.
And me at Rick J. Newman, 5-star reviews only.
All right, everybody. Thanks a lot. We'll see you next time.